Hey everyone, welcome back to the Consumer Credit Matters podcast. I'm William Black. In this episode, I'm joined by Sid, the CEO of a company called Intain, and Patrick Tadie, a former trustee and now advisory board member. We're diving into how emerging tech, namely AI and blockchain, is finally making a real impact in consumer credit and structured finance. We talk about how Intain is putting these tools to work right now, solving real problems like document verification, data integrity, and trust structure automation. So wherever you touch consumer credit, as a lender, a servicer, a securitizer, or investor, this conversation will give you a clearer view of just how powerful and practical this technology has become. It isn't tech that's 5 years away. It's already here. So with that, let's get into it. Intain, your company, Sid, is in the middle of, in the middle of the structured finance industry in a very technical and, let's say, kind of a hot part of the market right now. Anything that you can describe with artificial intelligence, AI, and or blockchain technology, cutting edge and very promising technology that is being brought to the structured finance ecosystem. And your company sits in the middle of that, and so I know this conversation is going to go deep into a lot of those topics. I've really been looking forward to it. And Sid, as CEO, maybe I think you're best positioned to really let our listeners know what exactly Intain is all about.
So at Intain, we are building the digital infrastructure for structured finance. So the way we look at it is that structured finance moved from Excel sheets over emails and reports over PDFs to suddenly so many tool providers providing tools to modelers and trust banks, investors, everybody. We try to put all these stakeholders onto a common data rail, which is on a blockchain, and then provide a digital solution to each stakeholder to be attracted to our data rail. So just two examples would be the best possible modeling solution to trustees to do the payment waterfall, and the best AI-based document review system to the custodians to work as verification agents.
Got it. And I'm sure we're going to go deep into a number of those topics. And Patrick, you and I think we intersected many years ago, probably behind a pipes and drapes kind of situation at the Vegas conference or something like that. But you come from this industry from a different perspective, as formerly at, I think it was Wilmington Trust, if I'm not mistaken. So from the trustees role, which, obviously an incredibly important role within structured finance, and one that has also been, I think, a topic of discussion around exactly how blockchain and this type of technology is going to intersect with the traditional roles within structured finance, in particular the trustee, but there are other roles within the structured finance ecosystem that we'll talk about as well. But maybe you can let us know how you kind of came to be as part of the client advisory board there at Intain, and what your role was and what your role is now.
Right. And Will, again, thank you for inviting us to be on this podcast. We really appreciate it. So I have been fortunate to work on several different aspects in my career of the industry. The most recent was as a trustee shop, both Wilmington Trust and before that BNY Mellon, both for at least 10 years and up to 12 years. I've always been fascinated by innovation and technology. And I started reading about blockchain or distributed ledger technology about 13 years ago and was just fascinated by it. And quite frankly, a bit fearful of it too, because some of the things that were being discussed even then would probably at some point replace some of the things that we as trustees were doing. And quite frankly, issuers, I've been fortunate to work on the issuer side as well as the investor side in my career. And I definitely foresaw the need for technology in this space. There's a lot of repetition. There's a lot of manual processes that cause delays in getting information out, getting accurate information. And it just fascinated to me to start reading it. And I started doing a lot of research on my own about it, Will, and just really started to look at it as potentially something that would be beneficial for the trustee community. Was able to convince some folks at M&T Bank and Wilmington Trust to do a pilot project, and was pretty successful. We were able to get a lot of marketing yardage out of it, mileage. And in the meantime, we had actually hired Intain to work on some transactions when I was at Wilmington Trust and became familiar with Sid and his company. And again, really impressed by what they had been doing even at that time. And obviously moving forward, they're developing a lot more applications that I think are going to be extremely beneficial and already have been for the industry. So my initial fear, if you want to call that, of distributed ledger technology and associate with that AI, I think has definitely evolved into, it's certainly can be very helpful for a lot of participants in the investor, issuer, and trustee, rating agency, lawyer, and accounting community.
Thank you, Patrick. We're going to be bringing you back into this conversation quite a bit, because I think your perspective as kind of a traditional role and how it's going to have to adapt to this new technology is really important and top of mind for everyone following this this really fast-paced change to the industry. Okay, great. So, Patrick, thank you for that. Sid, I want to turn it back to you and ask just kind of I hope this is a softball question, but a foundational question that I think is important. What problem, when you started Intain, what problem were you trying to solve? And before you answer that question, maybe I think it's a point of interest. What's in the name? How did you come to the name of Intain?
So yeah, the interesting question. So Intain name came from intelligence and blockchain. So 2018, last couple of years, AI has been very fashionable. But when it was not that fashionable since inception, we always knew that to solve the problems in structured finance, which is half a dozen at least types of entities, all working off their systems, shipping across data in Excel sheets, it's not only a cost problem, it's a risk issue as well. That you are reporting the status of the underlying assets effectively 55 days post facto, right? And everybody is reconciling data with each other. The trustee has their modeling systems, they reconcile data with the servicer, the investors have their analytics systems, they pick data, upload to their systems, etc., etc. So the first thing was you had to establish data integrity. And these were early days of blockchain and wider blockchain adoption. And we thought that if we put all the stakeholders on a blockchain network, you solve for the data integrity issues. Forget about all the other jazzy things blockchain talks about. But if you can just eliminate inter-party reconciliation, the battle is half won because the data thing is sorted out. And then if you have sorted the data thing out, nobody will come to our platform just because we tell them that I've created a network and because it's a great network, come to me. Which means that I had to go to individual stakeholders and say that I am the best automation solution for you. And that is where AI came into play, that I can go to a verification agent and say that 90% of your tasks can be done by AI. So that is the intelligent part. So basically connect everybody through a blockchain and automate everything through artificial intelligence.
Got it. The dialogue I've had with the marketplace tells me two things. One is that there has been a tremendous amount of promise. This goes back to something you were saying, Patrick. There's been a tremendous amount of promise articulated going back at least 10 years. You said 13, but yes, it's been a long time. And you probably have heard this, both of you, in various conferences going back about that far, is that the blockchain revolution is only 5 years away or something like that, right? It's coming soon. And then 5 years would come and go and it was still 5 years away kind of thing. And I don't know what people are saying now, but it's still years plural away, hopefully in the single digit, but it doesn't seem to be getting that much closer, that much more quickly, the blockchain revolution. I'm not saying that it's not making inroads, because it is. Intain is proof positive of that. But there are still really, really small number, one handful at most, of firms that are fully entrenched in blockchain technology. So I do want to talk about that and dwell on that a little bit in terms of what some of the barriers to adaptation are from your perspective. That was one point I wanted to raise. And then the second point was that when my discussions with others in the marketplace, and in particular, seems like nowadays you can't have a conversation without mentioning, well, blockchain, AI, or now private credit. Okay, so we're going to talk about all three here. But private credit in particular is an opportunity of high growth and the adaptation of structured finance technology that that would allow for, in some cases, I think quite literally, these Excel spreadsheets that are tracking, hundreds of billions, if not trillions of dollars worth of asset in data and performance that needs to be shared and assimilated and analyzed on as close to real-time basis as possible, that can only be solved with some kind of digital solution that has a lot of data integrity to it, so that you don't have the kind of redundancy, Sid, that you were referring to. What are some of the barriers to adapting or adopting this new, not so new now, but the blockchain technology?
So I think I would categorize the barrier into three parts. One is just the regulations, and we'll keep that aside. None of us influence that. So we take as it comes. The second is just in terms of industry adoption. As I said, there is no benefit to going and pitching and saying that you join my blockchain network. And I think most of the industry got that wrong. The attraction for each player, whether the issuer, the rating agency, custodians, trustees, has to be that how am I changing your lives for the day-to-day work that you do? So to the trustee, how am I making your paying and calculation agent role better? To the custodian, how am I making your document verification and other roles better? So blockchain in itself does not do. You will have to create a digital stack which appeals to people, and I don't think regular blockchain solutions have done that. And third, it's a problem with the blockchain industry as well. And I think it's best kind of characterized by a friend of mine who switched from blockchain technology, a real geek, into the AI industry. And he said that when he goes to an AI conference, he sees 80-90% people who are motivated by technology and 10-20% people who are motivated by money. When he goes to a blockchain or crypto conference, the proportion is exactly the opposite.
Right.
So if bulk of the industry is focusing on punting rather than building technology, then it will always remain N+5 years. And that is one challenge which blockchain industry needs to introspect on as well.
Right. Patrick, maybe I'll ask you to chime in on this part of it as well, because, particularly from, you mentioned it, I mean, the trustees are, in the conversation about, is this role something that can be supplanted by technology? I know you have some strong views on that, on the answer to that question, but maybe you can kind of speak for the industry on how this technology will, call it, enhance the role of the trustee, but not, I think it's fair to say, not likely replace it.
Yeah, I would definitely say it's not going to replace it. I think that in any transaction, there needs to be an independent third party that is ultimately responsible for ensuring that transaction documents are adhered to, and that will be a trustee. I mean, I've talked to some people in the industry who are pretty adamant that they're going to remove every intermediary to the transaction, and clearly that may happen to some extent, but it's not going to happen with trustees. And I don't say that lightly. I mean, I've thought about it a lot. I think one of the barriers too, Sid mentioned this a bit, is just investor acceptance. Investors are the ultimate buyer of product, and they have to become more familiar with these two types of technology. and how they can benefit all parties to a transaction. As far as trustees specifically, it clearly can enhance their productivity, accuracy, and timeliness. If one thinks about the process of taking in collateral on a monthly basis, especially if it's coming from more than one servicer or several master servicers, it comes in different formats. It may come in different times. It sometimes changes formats. That's painful to sit there and reconcile. Mm-hmm. What Intain does is automates that reconciliation one time, and then everything gets mapped so that it's done much more efficiently and accurately. I mean, in the past, there's been a lot of issues with accuracy of data. Beginning balance this period doesn't equal ending balance last period. I mean, just basic stuff. It's like, well, what happened? Now you kind of mitigate that. In addition, having transaction documents available so that people can do searches on those as well is pretty valuable. And I think a lot of times that gets sort of missed in the process. Everyone wants to go back to the transaction documents of the Bibles of the deal, and fortunately, Intain is able to provide that set of information as well. I would say the other thing that at least to me is something that's a huge benefit is that it enables people to do routine activities automated, so that people are spending more time, talking to clients, working on potential new transactions, and also just it's more interesting work, quite frankly. I mean, you think about banks 30 years ago or 20 years ago, and there was probably when the ATMs were introduced, and now we all take that for granted. But at the time, that was a big deal. Oh, I want to talk to a teller all the time. Well, now most people don't. I don't know about you, but I deposit checks if I get checks electronically. I don't go to a bank for that. I mean, I can do it on my iPhone, right? I mean, I think there's just need to be a continued embrace of technology and sort of a continued education about what this is and also isn't. I get a lot of people saying, "Oh, DLT is Bitcoin." Well, I mean, not really. It's an application.
DLT, digital ledger technology. Distributed ledger technology.
I mean, and obviously, Bitcoin is an application of it, but it's only one of many. And that's like saying, Excel is a bad program because it spits out one bad spreadsheet. Well, that's not true either. So I think it's important for people to continue to become educated. I mean, I remember doing some presentations to boards of directors, and there was a lot of confusion about it initially, and I finally said it's not just Bitcoin. I mean, that's just one application of thousands, if you want to call it that.
Absolutely, and let me. I want to stick with this topic for a second here, Patrick, because I've spoken to people who, as Sid was saying, truly believe that there is a future state in which everything is digitized, including all the movement of money. We're probably not going to go that deep in this conversation, but smart contracts will be embedded everywhere. They will absolutely do to the letter every aspect of the operating documents. Why can't that be digitized and therefore the role of the trustee be digitized? What is it about that way of looking at things, a future state, that kind of still doesn't sit right with you as someone who's kind of knows the role of the trustee very deeply?
Yeah, and again, I think some of it's just continued education about what it can do, and also some things it may not be able to do. A lot of it's just fear. I mean, there's a fear of the unknown, at least to some people, the unknown. And I think some people are maybe they're not as accepting of technology as one would hope. I do think that as people continue to get more education on this and they see real life examples of it working, I mean, obviously Intain's doing work for at least 2 trustees and clearly more. Word will continue to get out. It's more about educating people so that they understand the process and they understand that it works. And once people start seeing that it works and what the benefits of it can be and are, people will start becoming even more accepting of it than they already are. As I said, the biggest community that still needs to educate on this and accepting of it is investors, because ultimately they're the ones who are buying collateral, they're buying bonds, and it eventually it's up to them to say, yep, I accept this now and I'm good with it. I've seen it work in action, and obviously it's way more efficient, and it's going to help me with my velocity of capital and my accuracy and my timeliness. then I think it's going to continue to become even more mainstream than it is now.
Got it. Sid, back to you for the next question around differentiators that Intain brings to this segment of the market. You do have competitors, and I think it's fair to say it's becoming increasingly competitive. I call it a race to attract customers who are more open to this technology than ever before. You and I talked earlier about the importance of data provenance, data integrity, and validation. What is it in your mind that is going to differentiate Intain's approach to the use of blockchain and AI technology, which I'm sure we'll get into later, relative to your competitors right now?
Yeah, so I think we have a lot of technology competitors. There are people who compete with us as analytics players or as people who are trying to tokenize private credit, etc., which are blockchain players. But I don't think we have many philosophy competitors in terms of how we are treating the technology. So, for example, there are just so many analytic solutions in the market now. Because if you were at SF Vegas and walked the corridors, half of every aisle was analytics reporting one of these
Right.
companies. But our view there is that the starting point has to be data integrity. Because the data is coming in from the servicer, the trustee is working off that data, the investor is working off that data, the rating agency is working off the data. If everybody has bought their respective softwares, maybe best-in-class analytics tools, picked one from each aisle in SF Vegas, but if you're still shipping data to each other and reconciling, it beats the purpose. Because it means I ran middle and back office operations before starting Intain. And the primary kind of objective of every CEO or CO in those roles is to do a trade-off between risk mitigation and cost reduction. What these technologies are offering you is the ability to do both at the same time. That if you can establish data provenance and then run analytics on top, then you will achieve both together, which otherwise just seems counterintuitive. So that's kind of our differentiation vis-a-vis this crowded space of analytics reporting tools. That we plug in reporting on top of a data rail where immutability, auditability, provenance established. With respect to this blockchain crypto tokenization world, as Patrick also talked about, we are working with trustees and custodians in the industry. We are not here to disintermediate anybody. Through automation, we believe in efficient intermediation. So we are building a complete digital infrastructure, not just a tokenization layer that you take the final security or the final loan and you trade that. So that's why we have kind of competitors and technology silos, but nobody who's stringing the technology together in the way we are doing, or who shares the outlook of the world that we have. That nobody will be eliminated, but you will have far lower costs, risks significantly reduced, and means what we put on our slides is the end goal is that today the minimum viable threshold of a securitization is maybe $150, $200 million. You should be able to do a securitization with the same rigor at $25, $30 million.
Got it. And I know maybe now's a good time to talk a little bit about the AI aspect of your business model, an important component, and I think also an important differentiator, if I'm not mistaken. Can you talk a little bit about the AI aspect of your business model and how that differentiates itself and how that adds value to your customers?
Yeah, so there are two kind of distinct parts or distinct areas where we apply AI. One is on the diligence on documents and verifying loans. Now, that is something that has been there with Intain since Intain started. So that precedes all Gen AI and Chat GPT and LLMs, etc. We were doing it with proprietary models. Now we have adopted some of these Gen AI models. There, the belief is that you take the loan docs, you take the loan data, instead of doing this 5-10% sampling, at a fraction of the cost, review 100% of the docs, get them certified by an actual custodian. So it's not competing with custodians or verification agents, get it certified, and then record that on a digital ledger. So people would have heard of non-fungible tokens or NFTs in context of paintings, that the uniqueness of paintings established. We bring that technology to record a loan. So an immutable, auditable, and unique record of each loan, which has been verified through AI and certified by a custodian bank. So that's one usage. Second is on the data side, and this is something that has come in vogue in last couple of years with all these LLMs and agents, etc. There, everybody knows about agents, so you give them a task and they will do a task for you. So, for example, you have a junior analyst in your structured finance team. There are a lot of people who are trying to get agents do some of those tasks. There, our advantage is because the moment we take servicer data for a particular asset class, we get that standardized into a master template.
Sure.
Now, this is again, in a way, serendipity, because when we started Intain 2018, 2019, the European regulators, ESMA, kind of imposed specific templates for each asset class. We wanted to build a software which had specific templates for each asset class. So we very shamelessly borrowed what the regulators in Europe had imposed, added a few things customized for US, which is why we are by default ESMA compliant in Europe, US as well. So now when I launch an AI agent, my AI agent, which we call IDA, she knows that for this asset class, I will always see data in a specific syntax, which for most of our competitors, the messiness of the data, they are trying to compensate through the intelligence of the AI engine, right? So in a way, we are providing an AI agent to do a lot of your data tasks, which at some point in time may make our own solutions redundant. Because why do you need graphs and charts if you can just ask the AI agent? And we can get into details of what happens behind the AI agent. And IDA also then does all your document related tasks. So you want to compare documents, you want to look at indenture again, you want to check the clause in an indenture with an amendment. So it is trained specifically on structured finance data and documents to do all tasks that any assistant would be required to do.
Sure. So you're hitting cash flow analysis, accounting management, you finance management, all these kind of, logical segments within a company that, and many derivatives of those that I'm sure I haven't touched, all emanating from, a common database, speaking from the same data that you've ingested as step one. And your AI lays on top of that, as you articulated very clearly, that you've eliminated by normalizing the data from which the AI is working on top of, you've eliminated the variability that the AI needs to contend with, and that makes your AI that much more efficient and more effective, certainly as you train on something that has a lot less variability to it. So I understand that should prove to be advantageous relative to different types of approaches. So,
well,
yeah.
Quickly, I'm sorry to interrupt, but I think that the ability to get the data normalized and in a standard format really is an important thing. I think also the fact that the documents are verified and validated one time and then they're set in stone is also huge. I mean, I go back to when a loan was traded 2, 3, 4 times. They're put into 2, 3, 4 different trusts over the life of the loan. And every time there was due diligence done on the loan, as an example. And, it was underwritten to guidelines. You didn't know which guidelines which they were underwritten. I mean, it was a painful process and costly. In manual, I mean, this just, it does it once and it sets it, and it's just a given. It's accurate, it's right, it's been validated. And the same thing with the data. It's done once and it's accurate, it's validated, and it's ready to be acted upon. And that's a big shift from what has happened in the past. And again, that's cost reduction, it's accuracy, and it's just much more, it's done in a much more quick time frame.
Yeah, I mean, you mentioned earlier, practitioners' trust in the system, in the technology needs to, catch up to what the technology is capable of doing. I think that's very true. And that's certainly one kind of human element that needs to, take place. I think so no disagreement there. I think another aspect that does get discussed, maybe not as much, but is maybe even more important, is how do you deal with the system? And here I'm talking about the legal system of provenance, and of invariably there will be disagreements or mistakes made, because after all, blockchain is nothing but code. Smart contracts are nothing but code. At least right now, humans are writing that code, or most of it, or maybe that will change too. But, even the AIs are not going to be perfect in code writing in the beginning. So, these are also important aspects to the landscape, the risk, the credit risk and legal landscape that is out there today. So sorry to bring it back, but I did want to make that point, because I do hear in my conversations with market participants that they're only, they clearly see the efficiency kind of attractive, characteristic of this technology. But ultimately, at least right now, they're going to have to rely on the, call it, traditional or legacy legal provenance establishment. You have to show. I don't think this is true in all asset classes, but it probably is in some. Maybe chattel paper, something. Oh, there's electronic chattel. You have to show the piece of paper with the wet signature on it in order to have the primary legal title to a given asset, for example.
Yeah. As an example, in document custody land, we once had an investor who said, "I just want to see my files. I want to go into a vault."
Right.
He said his comment was, "I want to go hug my files." And I mean, that's a money. We laugh about it, but people have to get past that. And one thing that Sid mentioned too, I think is pretty critical, is that one's able to use AI to compare documents across transactions. So if you have a portfolio of deals, you want to make sure that the terms are consistent. So things like indemnity, for domicile, for any type of topic, you can compare and contrast and make sure that they're the same. Or if they're not the same, why were they different? I mean, there might have been a negotiation or something that happened with that. Might have been a requirement for that investor only. But you can look across transactions and make sure that all the terms are consistent. And that is something that, being done manually, it's very time consuming, it's costly, and it's not accurate. If you use it, it's automatic and it's accurate. So
I believe that the law is going to catch up, and has been making strides in that direction, particularly around electronic custody, electronic filing, and so on. And some asset classes are further along than others. But, you can't imagine the day where, there's a discrepancy between the electronic file and your paper file, and you're like in front of the judge saying, do you believe this digital account or your lying eyes on this on this piece of paper that has my signature on it? So these are the things that people talk about, is in all seriousness, about the challenges that need to be, you need to have bright lights on, light on.
Yeah, remember also, well, that there are 3,300 counties and parishes counting Louisiana, and every one of them has county recording offices with people who work in them, and obviously they congressmen and senators who they don't understand some of this technology, and they're like, well, this could mean people's jobs are eliminated. So again, that's something just to think about in the back of the mind. I mean, I've talked to people about it in the past, and I've done presentations to congressmen and senators and their staffs, and it's interesting what goes through their minds. And again, this is the mindset that we still have to educate people on. But anyway, that's just another thing to think about.
Yeah, I assume you're referring mainly to the mortgage industry now, right? I mean,
Right.
that's been a bane of that sector's existence for some time now. And even though some of these digitally forward companies like Quicken comes to mind or Rocket, they can only take it so far for the very reasons that you're pointing out. And there needs to be some more systemic or systematic kind of changes at the ground level in order to really make it fly, I think. Okay, well, I think maybe, we've talked about a lot of this now kind of in the abstract. Maybe I can ask one or both of you to bring it, to kind of more of a practical, if you can use either an example. I mean, obviously you can anonymize the source here, but I think it would be helpful for listeners if you could kind of walk us through a typical customer interaction, and then what Intain provides that customer, just to give folks kind of a front row view of what it's really going to look and feel like to use your products.
Yeah. So if you can allow, I'll do it in two parts. One is because we tried to show what the future would look like through the Wells Fargo Innovation Initiative a couple of years back. So if you think there is some holy grail, we have demonstrated the technology for that holy grail through this innovation initiative. And what that really looks like is an issuer wanting to raise capital against assets, could be credit facilities, whole loan transactions, securitizations, as a pool of loans, has those documents, gets integrated to a system. Those documents get verified by an AI engine. The AI engine creates an exception report, which a custodian reviews and certifies. That certificate and that reviewed document is recorded on the digital ledger, which is what's called the NFT. An underwriter, the market makers do structuring, whatever transaction they have to do. It's available to the investor to invest into. Investor can really do the diligence on the platform because they can almost zoom in to a deal, every single loan, every single document of the loan, all collection history. It's like, just think of something where you're increasing zoom percentages. You are drilling down further and further. You make that investment. At that time, it looked far-fetched because in the pilot, we used USDC, which is a stable coin. But now the stable coin bill is in the Congress, should get passed this year itself, most probably. So the investment could happen through a stable coin and get settled. Once the collections start happening from the servicer, that data comes in, automatically gets mapped to a master template. The terms of the indenture are available in the system as a model. So the payment waterfall gets calculated, the additional strats, performance, all those details are there, which is what enables both the coupon payments and in real time, the investor has all the analytics about the underlying assets available to them. So this is not future in terms of technology, it's future in terms of adoption, but this is something that we have demonstrated in partnership with a large player as part of that.
So what you're saying is the technology is ready to launch, but you haven't had a real world application of it just yet. This kind of end-to-end application, as you just described it, do I have that right?
That's right, yeah. Because for that, you need acceptance of stable coins, the settlement channels, etc.
Sure. And you don't need, and do you need to quote unquote sell the end-to-end solution, or can you parse that up into, well, I only want to have the data validation part. I don't want to have the USDC, or the investor part of it. I just need the data provenance part of it. Is that possible, or is that, because I got the impression that's already going on today.
Yeah, exactly. Yeah.
Okay.
So we say that this is like a 3 stages of adoption. First is automated. So which is, we work with custodian banks, completely automate using AI, the document diligence process. And we have done 200,000 plus loans by now. In terms of cleaning up the servicer data, standardizing, plugging in the analytics, doing the payment waterfalls, there it's two of the fastest growing trustees run their business on the Intain platforms. So the automation part with multiple stakeholders is already scaling up on Intain platforms. So that's stage one. The second is what I call automated and integrated, which means that even if you don't worry about tokenization and end-to-end transaction, just run an integrated data operations for the whole deal. And we have now started integrating with the FIS core banking systems. We are onboarding loan pools from multiple community and regional banks, which means that the legal transaction will still be the paper transaction signed, etc. But the whole data flow across the verification agents, rating agencies, servicer, trustee, investor will be through the system. So that's the stage two, which is automated plus integrated. And stage three will be automated, integrated, and tokenized, which is the end state I talked about, which will need some more adoption and regulatory support.
Are we at, so we're clearly at automated. Are we at automated and integrated as well?
This year, yeah. So we are onboarding a lot of deals. So currently, is we are working with a bank in Florida. We are working with a bank in Texas. We are onboarding their loan pools. We are working with a solar lender. We are onboarding his pools. So instead of us working with custodians and trustees, the deal is now starting on our platform directly from the issuer onwards.
And will you be the system of record in those instances, or will there still be, say, a traditional custodian or trustee that's kind of using the Intain technology, but they at the end of the day are signing off on the
latter,
data?
Yeah, the custodian and the trustee, which, as I said, is Intain's philosophy itself.
Yeah,
the trustees and custodians are our partners. We want them to be so efficient that the other solutions which claim to disintermediate these people do not have that much of an edge over them.
Okay, that's super helpful. Thank you. And I can't help to bring back my former rating agency hat into this conversation, because certainly, and I don't think my former company was Moody's, and I worked in the structured finance industry for the better part of my career, and we certainly were paying attention to this technology and the Intains of the world, and seeing a proliferation of companies and applications of the technology talked about. Not so much, at least when I was there, I left 2 years ago, not so much plugged in, though, to the rating agencies in terms of, you can imagine a rating agency being a node on a blockchain. This was one of the things that has been talked about by many in the industry. I guess as both kind of a recipient and provider through that node onto the blockchain, you can imagine ingesting, for example, data that has been validated by either the chain itself, or more likely a third party that has validated it and put it on the chain through another node. Then anyone on the chain, including the rating agencies, could ingest that data with a high degree of confidence, and in a future state benefit from a common syntax, for example. Now, this is all a bit pie in the sky right now, because you have to have closed loop technology, and you have to have agreement as to standards and syntax standards. And there's a lot, even now, I would imagine there's a tremendous amount of work that needs to be done in order to get to the point where a third party like a rating agency can plug into any closed loop blockchain and move about with confidence and efficiency. But I didn't hear you mention rating agencies. Is that because that's just too far afield from your core focus right now, or is that even on the radar screen?
So they are a node. There is a node for rating agencies on our platform. We have had our own team comprises of people from Moody's and S&P, our modeling and onboarding team. Our discussion with them suggests that they may adopt it first for the monitoring and surveillance role rather than for initial ratings. And the reason for that is that there's so many trustees are plugging into our systems. Now servicers are starting to plug into our system. So they know that the trusted source for their data is anyway plugged into our system. So for their monitoring and surveillance role, we are far more reliable and efficient platform to access data. For the initial rating, I think it would take some time for them to become used to.
Gotcha.
Yeah, I agree with that assessment too, Sid. I do think, though, that ratings agencies down the road are going to start seeing the benefits of this, and that the data has been validated, it's been verified, it's accurate, it's timely, and it's only that need to be validated and verified once. And to me, that should give the ratings agencies confidence that the data is correct and it's not going to change over time. I agree, though, that I think that the surveillance aspect is probably an easier initial thing for the ratings agencies to get comfortable with. I know, in having spoken to them several years ago now, there were some pilots they were working on. Clearly, I'm sure they're past the pilot stage now, but it's just it's one thing that they have to focus on in a host of other things, I'm sure.
Gotcha. I'm just wondering again, kind of wondering out loud, the promise of massive efficiencies, and you can even kind of abstract out to AI technology more generally, not necessarily its applications within structured finance, but it seems to me that we're still in the, call it, investment phase of this technology, where the efficiencies are going to have to run alongside the traditional way of doing things for some time in parallel. So even though it has the promise of being much more efficient in a future state, right now it's actually an incremental cost, which is another kind of hurdle to getting people to adopt. Do you find that as part of the discussion as a barrier?
I would differ on that, Will. Yeah. So,
yeah.
And that's why I said that we started focusing on automation, because that immediately makes an appeal to purse strings, right? So, for example, we are guaranteeing 3-month payback periods to the custodian banks and to the trustees acting as verification agents and calculation agents, respectively. That you forget about everything. You just treat it as a technology that automates the work that you do. In case of verification agents, document review. In case of calculation agents, modeling, payment waterfall reporting. That it will eliminate 80-90% of your effort. Just in 3 months, it will pay back, and you will have 70-80% cost savings there onwards. The rest of the technology, how the whole deal runs, etc., can follow from there. But immediately you have like within a quarter cost savings that will kick in for you.
Thank you so much for clarifying that. That's I'm glad I brought it up, because that's huge, right? Because I think that is a question in people's minds. Like, well, I'm going to have the brain damage and I'm going to have to crack open my wallet to take on a new technology. I don't want to be a first adopter. But what you're saying is actually, no. I mean, a payback in 3 months is incredibly short.
Yeah, we guarantee that. Yeah. So that's why we don't charge for a whole software. That you start running deals on the platform, pay per deal. It's obviously subject to some minimums. And yeah, we contractually guarantee 3 months payback.
Gotcha. Okay. Great conversation. I want to pause here and just see did we miss any big areas of the landscape that you'd like to go a little bit deeper on?
I think one thing to just keep watching out for within the first month, the statements both by FDIC and the SEC about digital assets and how they are engaging. The regulatory environment may sort out much faster than we anticipate. And the stablecoin bill is coming up in the Congress, and everybody says that's one of the earliest bills that should pass. So within 2025, the whole ecosystem will change very significantly, or could change very significantly.
So this is, I mean, it started with, I think, an executive, was an executive action from the Biden administration around digital technology.
So there was, but that was kind of a much wider crypto,
super high level.
Bitcoin is a commodity, not, etc. There was bill, I think 2 senators were working on it. But this time on both sides, the legislative support as well as the kind of regulatory attitude, I wouldn't say support, because just early statements, seems to be changing very fast.
Absolutely. And the digital currency aspect of this is going to allow for basically the bonds to trade and settle and so on using that technology. That will allow for confidence around this true kind of end-to-end blockchain solution as you see it.
That's right.
Yeah, because that's money that can talk to a software program. Mm-hmm. So in terms of computations of coupons being done, then interacting with that money, because money means today a software program cannot talk to US dollar.
Right.
So there has to be something.
That'll be exciting. And so let's just assume that legislation, just for argument's sake, passes this year. How quickly do you think the industry can bring it into the fold in terms, I mean, maybe there are other countries where this has already happened, so we have some sense of the speed at which the industry can catch up to the law in this case?
I think payments in some of these other industries will adopt it very quickly, because in those industries it's been happening for a period of time. In our case, as I said, the technology, we have already used this and proven how it would work. But I guess the structured finance industry will not be one of the early adopters. It's payments and some of the related industries would be the first to go, I guess.
Okay, well, maybe we'll end it on that pretty, I'd say, optimistic note. More and faster and far-reaching change ahead for not only Intain, but the entire structured finance industry, it sounds like, as these new technologies are usable. And that's exciting. Hopefully we'll have another reason to get on the podcast and talk about that aspect of your business model next time. But I do appreciate having you both on and you both being so candid with what you're seeing. I think it's an important vantage point that not many people get to hear about. So thank you for the education and the words of wisdom. Appreciate it.
Thanks a lot. Yeah. Thanks for inviting us.
Yeah. Thank you for the opportunity. Will. Appreciate it.
Thank you, listeners, for tuning in, and we'll be back with another episode before you know it. So thanks very much, everyone.